Welcome to the Broker's Lounge with Eddie and Carlo. Disclaimer, the information contained in this podcast is general in nature and does not take into account your personal circumstances. Head to the show notes if you want to book a free call to discuss your personal situation.
Welcome back to the Broker's Lounge with another week with your favorite hosts, Eddie and Carlo. How are you, Carlo?
I was waiting for the drum roll.
Why?
Because when you introduced me, you meant to have a bit of a drum roll.
All right, we'll do it again.
Yeah, so go again.
You've got Eddie with you and the most famous broker of all times.
I'm waiting for the drum roll still.
Mr. Carlo Colangelo. How are
Hey,
you?
everyone.
How you doing?
I'm
Good?
doing all right, mate. Yeah, it's
Is that good enough for you?
well.
Yeah. What's good after
Next week, I want to actually see a drum kit.
We'll bring the drum boys.
I used to play the drum, so maybe I could just go
You can do your own drum roll.
get the snare drum around. Yeah, okay, sounds good. No, I'm doing very well, mate. Thank you. Thank you for asking. You're doing well.
Very good. Very good.
Good stuff. Look, I guess the hot topic on everyone's lips this week was the RBA and them cutting interest rates. And I know there are tons of videos going around at the moment, probably tons of podcasts going around at the moment. But I guess it's incumbent on us to help still educate people in terms of the RBA rate cutting rates and what it actually means, why it actually happens. Probably it's a good one to speak about. More importantly, what does it actually mean for borrowers going forward as well? And I guess the flow-on effect in terms of how it affects property prices, which everyone's keen to see go in the right direction, and also the broader economy as well. So probably the best way to start off with maybe asking you, Eddie, a question is, why did the Reserve Bank cut rates? Because we know they didn't do it because they love us and they feel sorry for us and like that.
I feel like they love us.
There's got to be some methodology behind it.
Yeah, true. And I think, like you mentioned earlier, this is the biggest topic in the mortgage space and the property space and the economy space, because like interest rates are like the nuclear weapon of the economy. Like they can be used in ways to shift economies in certain ways. And obviously, back to your question, that goes back to what we've seen over the last 4 or 5 years and how things changed after COVID, that extra spending that governments were doing, the tax cuts they've had, and how that stimulated the economy and have seen inflation go through the roof. Yeah. So they had to increase rates a lot sooner and a lot quicker, and it was like the quickest rate increases in history. So
it's like a machine gun, wasn't it?
Yeah,
like bang, 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 bang.
Exactly. We've seen 13 or 14 rate rise. 13 in a 15, 16 months period. And it's very interesting because this is the first rate cut in 4 years. So
I think that's why everyone was. I've never seen so much anticipation around the RBA meeting. It's like in previous years, people were like, "Oh, the RBA meet today. Okay, whatever. Who cares? On to the next one." But this year was like everyone was waiting for that 2:30 announcement.
Everyone's waiting for some good news because it's just been hard for a few years now, and everyone's just waiting for a bit of hope, bit of light. Like we've all been looking like, okay, we can see the light when it's happening. I
think it was like people feel like they're in a tunnel and they could see the light at the end of the tunnel.
That's one long tunnel.
They were just hoping it wasn't like a steam train coming the opposite direction with that light. So.
Yeah, we've had a few steam trains.
Steam train, otherwise known as the RBA train.
True. So this time we have seen the cut, and I think it comes down to how we are trending as the economy as a whole. Like unemployment has gone up into that 4.1, 4.2% mark, which was the similar way before COVID, because during COVID it went down to like 3.5%, which was the lowest ever. Property prices have stabilized pretty much over the last few years due to more restricting in lending space. Borrowing was very expensive, so this curbed the demand on the property, and in return, the prices have either dropped in certain states or just were within the reasonable growth range of 3, 4, 5%, not like the 10, 15% we've seen during COVID when everyone was just spending money.
Unsustainable, that's for sure.
Yeah, and obviously consumer spending slowed over the last few years due to higher interest rates, meaning bigger mortgage repayments, meaning less money to be spent on other stuff. So all these things combined, I guess, we reached a point where the economy can take a rate cut.
Yeah.
We can probably do a bit of stimulation without overstimulating, like what happened during COVID. And I think that's what led to that 0.25 rate cut that we've seen on Tuesday. So
there's the RBA has always been very cautious around that if they do pull the trigger and cut rates, whether that would overstimulate the economy again.
Yep.
And the inflation figures for the December quarter were really good. What do they get down to? 2.4%.
Yes.
That's the headline rate. But that's probably a good indication because that's typically a quarter where there's a lot of consumer spending as well. The lead up to Christmas and all that. So I think everyone should pat themselves on the back for doing the right thing.
Able to spend, if anything,
keeping their money in their wallets and keeping their credit cards in their wallets. So well done, everyone, because it's definitely helped bring things back into a little bit more normal levels. So
I've seen a video of Mike Boris the other day where he's like, "This is not on the RBA to bring down inflation." We
all have a part to play in making sure inflation is under control, because if we don't, well, we've seen what the result of that. We saw it. Obviously COVID was a little bit different because there was a lot of other factors that had rates coming down so quickly as well during that period as well. So
absolutely. And like this rate cut, maybe it's not huge in terms of direct effect, but it is huge in terms of signaling of what to expect and what might happen during the course of this year and next year. So what do you think the forecast is for interest rates this year over the coming 12 months?
Is this another bet?
Maybe it can work. You're a gambler.
Well, our last bet probably paid off. Well, it hasn't paid off yet because I haven't had lunch from you anyway.
Well, we lost. Both of us lost. You said March, I said December.
Yeah, well, there's technically not actually a meeting in March anyway, because
there is.
No, because I think it's every 6
end of
weeks.
March. Yeah.
Or is it going to be end of March or early April? Anyway, so okay.
Regardless,
it's a draw. We'll call it a draw. What's ahead? Look, I think the key bit will be that the RBA is going to be super cautious going forward. So if you think there's going to be any back-to-back rate cuts, probably think again, because they're not going to be doing that. Gone are the days where we used to see that quite often, where when inflation was going downwards or southwards, whatever you want to call it. We quite often see a rate cut 1 month, the next month another rate cut, same as what we saw when they were increasing rates as well. But I wouldn't expect to see that over the next 12 months anyway. The key thing is obviously making sure that inflation stays under control, stable as such. If we can continue this trend of where inflation is at the moment and it starts to stay in that band that the RBA is looking for, it could potentially mean another rate cut. Obviously, the opposite to that will be if inflation starts to tick up again, because we have a rate cut. There's a bit more money in everyone's pocket. I don't know how I'll spend my extra $150 a month, but
it's going to be hard.
I'll work out a way. But there will be a lot of families who will see it as an opportunity to just start increasing their spending again. So we've got to be very careful as to keeping that under control. There are other outside factors at the moment as well, which probably haven't played a bigger part in the past, but in terms of global economic trends, Mr. Trump with his tariffs is obviously going to be a big factor as well.
Beautiful tariffs. So big tariffs.
I've got to get you the red hat now. Okay, now you've done the Trump impersonation. That's impressive. But look, I think if you look at the view of most of the bank's economists in this country, they're still probably predicting I'd say between 2 and 4. They're a little bit divided when it comes to that. On top of what we've seen so far, I think 4's a long shot. 2's probably right on the money. I think our next one, there's probably the market's almost factoring in. The next one will be around, if it's not May, it'll be August.
Yeah.
And on the assumption, obviously, that inflation does stay under control as well. So I guess for people out there who are looking to purchase a property, whether it's for them to live in or for investment, it's worthwhile for people to revisit their cash flows and work the different scenarios. Okay, if rates were to stay as they are, can we afford it? If rates were to be cut again 1 or 2 times, what does that do to our borrowing capacity? It just helps out with a cash flow planning point of view. So definitely there's lots to unfold over the next 12 months.
Yeah.
We could see a lot of things shift. The key is obviously staying informed as well. So
Absolutely.
and that's obviously our job as brokers, and obviously with this podcast as well, is to keep people constantly informed with what's going on, because it's going to be an ever evolving event this year.
Also, the I guess a big factor is waiting on those government subsidies to be stopped around June, July, regarding the energy
costs. Yep.
So that is a big factor as well. That might push.
I think there's still one more payment to come, I think, for people.
I'm not sure.
I think there's still one more to come. So
I think they end around June, July.
Yeah.
And they're expecting for prices to because if energy prices go up, everything goes up as well. So
yeah, and I guess that's probably why a lot of the economists are leaning towards the August rate cut rather than the May one, because we could see an uptick and maybe some, not false inflation numbers, but at the end of the day, we want to be able to strip out those energy rebates.
So what's your bet? How many rate cuts for this year?
It'll be another 2 more this year.
Yeah.
I hate to say it, but I'm probably on the fence with the May one.
Okay.
I'm not 100% certain, but although May is still 3 months away, so no, March, April, May, 3 months away, so possible. I'm going to go the safe bet. I think there'll be one in August and then one towards the end of the year as well.
Yeah.
Just because of the language that still comes out of the RBA is that they're not guaranteeing any more rate cuts this year.
Yes.
So they're super cautious, and they're just like going, here's your rate cut that everyone was wanting, and you guys have done the right thing. Let's now not get ahead of ourselves and go overboard. Let's keep inflation under control.
And I think that's very important, because
it is.
The previous governor, when he said we're not going to see any rate increases before 2024, and
what did Carlo do? Carlo went and bought a beach house and got a loan for it and fixed his rate for 2 years.
Well, yeah, exactly.
Thanks, Mr. ex-RBA governor.
Yeah, exactly. So it's very important to send out the right message.
Yeah, and I think
don't overpromise.
That's one of the key things with the RBA announcement. It's not just what are they doing with rates or how much are they cutting by. It's
the messaging,
the message that sits behind that, and that'll help dictate or help people predict what's going to happen as well. So.
Yeah, it sets the vibe, I guess.
Yeah. So, how's this going to affect borrowers? They're the big ones in all this. Obviously, don't get me wrong, there are other people on the other side of the fence who don't have lending.
Who we are concerned about.
We're talking about lending in this particular
We don't care about people who don't have lending. Savers,
mum, dad, sorry. Anyway, apologies. But
but as mortgage brokers, obviously that's the.
How is that going to affect them? How's this 0.25% rate cut going to affect them?
So, like we said before, probably a 0.25 rate cut. It's not huge in terms of savings and borrowing and all that sort of stuff. So, on a 0.25% interest rate cut on a $500,000 mortgage average, that's about $100,000 per month in savings. So It's not huge, but you'll take anything at this stage, Yeah. And for borrowing, your borrowing will increase by about 2.5% based on a 0.25% rate cut. So
if we get 2 rate cuts?
About 5%.
Okay.
So you're looking at about $50K in borrowing on increase. So I think it helps the people who were stuck in a certain bracket where they couldn't go, especially first-time buyers. If they're looking $500,000 to $600,000, extra $30,000-$40,000 in borrowing can help them, into a place of their own. So it will help, but it will not have a massive effect on the economy and on the market, on the property market, I guess. So, and that's something we can discuss later. So it's more about making sure you are on the best rate available in the market at the moment, because being on a 6.1, 6.2%, which were the average variable rates previously, now you're looking at the high end of 5% rates. So just make sure you're priced well, make sure if you can keep the same repayments you were on previously, I think if you
Yeah.
manage to make those extra repayments, you'll be paying your debt quicker. And also at the same time, like $100, you can live without that extra $100, just like you have over the last 3 years.
The good thing is with just about every single home loan that's out there nowadays, they have this wonderful thing called redraw. So if you can keep your repayments at that same level based on the higher rate, when rates start to come down, anything that's over and above the minimum monthly repayment sits in redraw.
True.
Which is important because
you can access that.
You can access it, like I said, later on down the track, if ever an emergency, pull out the money, it's not going to be an issue.
100%.
Whereas if you're reducing your repayments down and the money's going to your bank account, I can guarantee one thing, you're going to spend it.
100%.
So,
absolutely.
Wise advice, Eddie, wise advice.
Yeah, exactly. And I guess if we are to talk about how that's going to flow into the property market, what do you think that rate cut will... the effect it's going to have on the property market?
The key thing is lower rates equals cheaper borrowing, which leads to more demand.
Yeah.
So the more demand typically means prices start to increase over time. I don't think we're going to see the massive increases that some people were expecting. And it's interesting, we saw that lady from CoreLogic speak the other day with regards to the different areas, and especially in Melbourne. It was good to see all the different areas within Melbourne and the changes in property prices, and obviously those suburbs in the more affordable outer areas are still seeing some good growth.
Yeah.
Those in the higher end have obviously seen little growth, if not negative.
Exactly.
So I think we're going to see a lot more activity from first home buyers, which would be lovely. I'm a big fan of first home buyers getting into the market.
Yep.
And I know there's been a bit of talk from the government around speaking with APRA, the regulator, around, do they change that 3% buffer for first home buyers to allow them to get into the market? My personal opinion is I think if rates are coming down, I think leave the buffer as is, purely because, before COVID, during COVID, when rates were starting to come down, people were still complaining about 3% buffer then.
And they still reduced
that's right. And people were saying there's no way that rates could go up by more than 3%.
They did.
History would too. It did, unfortunately. And I'm glad that the 3% buffer was there, because it's obviously helped people obtain a loan and know that they can afford it, even when rates ticked up more than 3% higher than what they were when they would have borrowed those money. So investors are going to be a big one in the market as well. I think you'll start to see investors maybe get back into the market as well. Obviously, individual states will have differing because of the different state revenue officers and the different land tax laws and all that. I think, with the changing government this year, I'm preempting something. An election year coming up.
Is it this year?
I think the election's this year.
Yeah. Is that state or?
That's federal election, yeah. Although I think state actually might be this year as well, which is probably not a bad thing, because, I think a lot of people wouldn't mind a change of government here in Victoria. But I'm not here to talk about politics.
Let's talk politics.
Eddie knows that I'm not a big one for politics. So, but yeah, look, expect to see some property price increase, but I think it will be more of a gradual increase in line with the rate cuts.
Yeah, true. It's not going to be massive. Mm-hmm. And I think it goes up in segments within the market. So I guess like a $700,000 to $850,000 price for a house has been the biggest targeted area in the market.
Yep.
So with this rate cut, that would shift that market slightly up, because everyone's trying to push to better house,
push the
better
envelope.
suburb, better. Yep. So it would push it up to like the 750 to 900.
Yeah.
And that would see same areas growing up in price, but I don't think it's going to be massive for this one, definitely. But yeah, like you said, first time buyers who are just missing out, that would give them that extra buffer to get into the market.
Yeah.
And investors might see the property market will be getting some gains, so they might start getting back into the market more.
And the other part that we haven't really spoken about, we don't speak about a hell of a lot, is around businesses as well. What effect that'll have. So, because a lot of the businesses are also borrowing money for their own business use. So, if we see cheaper rates on the market as well, it gives the ability to free up some cash and hopefully create more jobs as well.
Yeah,
which would be great, because we haven't seen the unemployment figures haven't been great recently. So and maybe also income or wage growth hasn't been there either.
So if prices start pushing back up,
Mm-hmm.
property prices. Now, obviously, this is not something we want to see, but there's always that possibility. Do you think the RBA would step back in to increase rates again?
Yes, the short answer is yes. They'll be carefully watching not only the inflation numbers, but also the property market as well, to make sure it doesn't get overheated, because if it does start to overheat again,
it affects everything.
Exactly. The flow-on effect is massive. So they'll do one of two things. The best thing would be they'll just pause for a while and just hold off from doing anything in terms of the RBA cash rate. The other bit would be to reverse that and start lifting rates again. I don't think we'll get to that because of what we've been through over the past 12, 18 months. But it needs to be in the back of everyone's mind.
It's possible. It's a very low possibility, but everything's possible.
Yeah.
And I think we will never expect to see rates like we've seen during COVID, like down to a 0.5% cash rate and all that sort of stuff.
Yeah,
I think it's that healthy limit within the 3 to 4% cash rate.
Yeah, because that essentially means a borrowing rate in the fives, the high fours to mid fives,
which is reasonable.
Yeah, it's just that we became so accustomed to the 2% interest rates and the 1.99 fixed rates or whatever it might be. But those who have been around long enough, aka me, have seen all the different cycles. And for us, the norm is where we're heading towards now over the next 12, 24 months, not what we saw during COVID.
Yeah,
that's not the norm.
And it's not healthy. Like, this is what got us here.
Yeah.
So I think having the rates around the 4% to 5% mark, it's okay.
Yeah.
Like, it's manageable. It keeps property prices growing reasonably, not just flying overnight.
Yeah.
And it doesn't take 60, 70% out of your pay every month to pay your mortgage. If you're doing 40 to 50%, you can still manage.
Yeah. I mean, in the old days, when you used to do, before they had all these weird and wonderful servicing calculators that we have at our disposal nowadays, it was all around the percentages that, it couldn't exceed 30% of the gross income, the mortgage repayments. It was very black and white. And then it went up to 40%. And now they drill down on monthly living expenses, you name it. So, but you're right. You don't want to be getting to that level again. And the key focus for the RBA was just making sure that the economy continues to grow, but not get overheated and having inflation get out of control again.
So takeaways, I guess things are looking okay, not great.
Yep.
We are heading very cautiously onto how we might see things work out this year.
Mm-hmm.
There is light, there is hope, but it's very cautious, it's very slow, it's very calculated, and it's best to stay informed, stay conservative as much as you can. Don't just get too excited and jump into it. Have a plan in place and speak to professionals and people to understand what your options are and what you can do to take advantage of, if anything, to happen.
And we don't expect everyone out there to stay informed with themselves personally. You obviously keep abreast of changes, but lean on professionals, lean on your broker, aka us, in terms of where the market's at, what we're seeing, and getting a good plan in place. That's going to be really important over the next 12, 24 months.
Absolutely. And always, I guess, having a plan is a good thing to have. So, absolutely. I think this pretty much summarizes what has happened over the last week and what to look forward to over the coming few months. Obviously, we'll be around to monitor it and go through it if
Yeah,
any
definitely.
major changes happen. Until then, thank you for listening or watching. Please don't forget to subscribe and leave us a feedback, and look forward to see you next
Yeah,
time.
and if you've got any other questions or topics that you want us to speak about as well, please do drop us a line. But yeah, until next time,
Thank you very much.
have a great day.
See ya.